Hi everyone, I'm Meenakshi. In this video, I'm going to explain about various types of bills of exchange which are used in trade transactions. Before going to learn about the types, let's see about the meaning and the definition of bill of exchange. As we have seen in previous videos, bill of exchange is nothing but a written document and it is an unconditional order drawn by the drawer for a specified sum of money to be drawn on a certain person or bearer of the instrument. It can be created either on demand or at a fixed future date. This kind of document is especially created for credit transactions. So Indian Negotiable Instrument Act defines bill of exchange is an instrument in writing. So oral confirmations regarding bills will not be acceptable. So this instrument must be in writing. It must contain an unconditional order signed by the maker. The maker is nothing but the drawer. He has to sign in the bill. Then it should be direct a certain person. Usually the person will be the drawee to pay a certain sum of money worth the uh, goods or products, the order of a certain person or the bearer of the instrument. So these are all the various features of bill of exchange which is mentioned in this definition which is given by the Indian Negotiable Instrument Act. Now we are going to learn about the various types of bill of exchange. According to the nature of bill, the types varies. The first one is documentary bill. Here the word documentary means if a bill has proof of trade like invoices, receipts and bills of lading or railway receipts, etc. It is known as documentary bills. These documents confirm that a real transaction has happened with the help of proof using various documents. For example, Ravi sells goods to John in another city and sends a bill along with the invoice and transport receipt as proof. So when this kind of transactions having proof, it is called as documentary bill. Then the second one is demand bill. Usually these kind of bills are drawn or paid whenever it is shown to the person who has to pay. There will not be any fixed payment date. For example, a bill saying pay rupees 10,000 to Sunil whenever he asks. You can't mention a particular date here. Whenever Sunil asks, then the drawee has to make payment. So it is called demand bill. It has to be given only when the person asks. So it is called demand bill. Usance bill is nothing but it has a fixed period of time which will be mentioned clearly in the instrument. For example, a bill says pay rupees 5,000 within 60 days. So the within 60 days is the specified period of time. So the amount 50,000 must be paid within 2 months of the date of drawing. So it is called usance bill. Here the date of payment will be mentioned clearly. Then inland bill. As the name indicates, if a bill is drawn within India and payable within India, it is called inland bill. For example, a bill is drawn in Chennai and payable in Delhi is an inland bill because both the locations are located within India. If the locations are located in India, it is called as inland bill. Clean bill. A bill without any proof document. If you draw a bill without any proofing document, it is called clean bill. As the name indicates, it will not have any proof for the transactions actually happened in the trade. For example, Raj issues a bill to Suresh for rupees 20,000 without attaching any invoices or receipts. Here, the transaction happens, but the parties are not at all mentioning the proof of the transaction. So it is known as clean bill. If there is no transaction, it is called clean bill. Then foreign bill, as the name indicates, a bill is drawn and paid outside India. It is called foreign bill. In foreign bill, it can be subclassified into export bill and import bill. As the name clearly indicates, if an export bill is drawn by an Indian exporter on a foreign buyer, it is called export bill. A bill which is drawn by a foreign exporter on an Indian importer is called import bill. For example, a Chinese electronics company sends a bill to an Indian shopkeeper for imported goods from them. So it is called import bill. So these are all the various kinds of bill of exchange. Then the another type is accommodation bill. When a bill is drawn and accepted to help a friend, there will not be any business interest involved. It is called accommodation bill. There will not be any actual trade thing will happen here. Only for the purpose of helping a particular person to create a rapport, these kinds of bills are drawn. For example, Arjun accepts a bill for his friend's loan even though no goods were exchanged. In this transaction, there is no actual exchange of goods happen, but Arjun wanted to help his friend. That's why he draws the bill. It is called accommodation bill. Then the trade bill is nothing but genuinely drawn for the purpose of only trade transactions. Then the last one, supply bill. This kind of bills are drawn by the supplier or contractor to the government department in order to supply their goods. These kind of bills are often used to get loans from banks. For example, a road contract supplies cement to the government project and uses the bill to get cash from the bank before actual payment is received from the government. Last kind, very rarely used bill is called fictitious bill. A bill where the name of the person drawing it, paying it, or both are fake. There won't be any genuinity in this kinds of bill. Usually doesn't prevail in trade transactions too. A fraudster issues a bill using a made-up name as the payer. There will not be actually a payer or payee involved in this transaction. All the things which will be drawn as completely fake. So it is called fictitious bill. So these are all the various kinds of types of bills of exchange. Thanks for listening.